Hello traders, hope you've had a nice summer. Been a little while since I've been able to put a video together. Just been incredibly busy really, working on the blog for the G7FX program. Got a brilliant new institutional blog which is for members only, absolutely free of charge of course. I like to provide incredible value as most of my members know, so that's up and running. I think I checked today, we've got around 50 posts up there now over the last 2 months. But look, at the end of the day, a lot of people who know me now, they realize that my main markets I'm trading are actually crude oil and S&P 500, and actually that's why I'm going to be covering a crude oil rotational trade today. I want to start really focusing heavily, kind of makes sense, on the markets that I'm focused on. One of the reasons I produced the MyFXBook and some of the FX stats is obviously I did work, on a sterling desk at an investment bank. So I do have a lot of experience with that market, but it's more important than that. I do like to provide some transparency, and in fact, I like to provide a lot of transparency. And um, I can't, obviously, as many of you know, with futures broker restrictions in the US, I can't link my futures broker, which is what I use to trade crude oil and S&P, to a MyFXBook. So to produce something, I do like to obviously dabble with FX, so I can produce verified stats and show people that I do this for a living. So unfortunately in July, obviously I got busy with the blog, and like I said, because the crude oil and S&P are my main markets in the afternoon, whenever I do get busy, I do have to take a step back from FX now and again. And actually that's what's happened this month. So July I wasn't able to be very active really in FX. If in fact I didn't trade at all. August, as you can see, I did 77% this month, but I know I'm going to be busy from next week onwards, so I'm not going to have time to do like a month end video. So I know I'm going to be closing the book this month on FX, and I'm going to use that time because I've got some other things coming up with this business, some other businesses that I have. And actually, I'm going to be honest with you, it's my anniversary, 5-year anniversary with my missus, and it's my birthday, and so life's taking over a little bit. So I'm, bringing forward, rather than doing a month-end video here, I'm going to be closing my FX book. And actually, I'm not going to focus on that this month. Last month, or the month before, I did like a long video on the 100%. Where I talked a lot about stats and things like that. So really what I want to do in this video, I'm going to try and make it as short as possible, maybe 10 minutes tops. I want to really focus on some crude oil longs that I took during the week, and that will allow me to introduce market profile and footprint. I'm heavily a volume and order flow trader, and like I said, I want to start really focusing in the future on bringing a little bit more of the microscopic things that I'm looking at. At the moment, a lot of the videos have been very macro, just talking generally about statistics, obviously showing you verified returns, talking generally about my trading. I want to start to go a little bit more in detail. Have noticed some of the comments that people leave me. I read all of them, and people have said, I'd like to see a little bit more detail. So definitely going to be doing that. And then just finally is I'm going to be doing and working on an institutional frequently asked questions series, because I do obviously get a lot of questions about institutional trading, professional trading, how it's different to retail trading, and also some of the questions about the program, the G7FX program, and FAQs around that, and how people can adopt institutional methods into their own trading, especially if you're obviously working, or I should say trading from home. Some people have this misconception that they don't have access to a lot of the things that an institutional trader like myself, I mean, I work from home now, but obviously in the past I've worked heavily in an institutional environment, where I used to go to a building every day with other professional traders, and have access to a lot of tools. And obviously I'll show a lot of people that are interested that anyone can have access to those tools even from home. So I want to do that as part of like a small series of videos which I'll be putting together. So what I'm going to do is, like I said, I'm not going to spend time on the MyFXBook stats like I have done previously, because it's the same thing. you can go and have a look at the previous videos. What I'm going to do, if you just give me a second, is I'll literally just show you, again, just for transparency's sake. Let me just bring it across here, so you can see. Basically, this is August here, which like I said, I'm calling it a month now. So you can see there, I'll just highlight it for you, 77% with 2% drawdown. So again, a lot of my drawdowns, as I've highlighted in detail in previous videos, are anywhere between 2 and 8-9% on obviously volatile months and so on, but typically tend to be quite low, and this month is no different. So I'm not really going to be able to show you anything different than what I've shown you in the past. And if I just click into it, again, just for transparency's sake, so you can kind of see my month, you can just see here that there's the book's closed. Basically, there's no open orders, there's no open trades. You can see it quite clearly. Like I said, I'm going to call it. I haven't really had much time this week, and I know next week is going to be really busy for me. So I think it's probably good if I just close the book this month at where it's at, because it's obviously nothing to be sniffed at. And what I actually want the focus of this video to be, sorry, I just fiddled with my pen here. What I actually want the focus of this video to be on is crude oil and introducing market profile and footprint. So without much further ado, what I'm going to do is I'm just going to flick over to my crude oil chart. Okay, ladies and gentlemen, this is my crude oil chart, and like I said, I want to start to introduce a little bit more detail about things I'm looking at in the day, and start looking more at the main markets that I'm focused on. So I do look at S&P 500 as well, but crude oil, I had some good trades during the week. I did have some S&P 500 as well, but I felt like this was a really good example of a rotational trade. And what I mean by rotational trade is often, in fact always, if you think about what the market is doing, right? The market's either in a range, and then it will go to the extremes of that range. So for example, we'll just be in a range, okay, and obviously the magnitude of that range will vary on a given day, and that's why it's very difficult to be systematic with trading. And I always try and tell people, every single day you've got to be able to adapt to slightly different conditions, but the overall infrastructure that you're looking at around or surrounding those conditions is always going to be the same. You're always looking at where's the balance on that day, where's the general value, as institutional traders like to say, on that day. So the magnitude may be different, but essentially the balance area is always going to look similar, albeit with a slightly different magnitude. So on this given day, for example, as you can see, the market since the day before and then coming into the day in question where I've taken trades, it was very much just in a balanced environment. And that's what this is essentially. And I'm looking at where is the fair value. And in a rotational environment, typically what will happen, as I said, the market's generally only doing two things, right? It's either in a range, which is a balanced environment. Would you agree? And every time it goes to the extremes of this range, we'll be looking to fade it back to fair value, or the market could be obviously in an expansion. So it's typically in a range, and then it decides to break out of that range, okay, and it decides to seek fair value elsewhere, okay. And this is really the basis of auction market theory. I'm not going to get into the details here. I could talk about auction market theory for hours, but obviously I want to make this video quite short. But in essence, it's basically what's happening in all markets in life, right? If you think about it, and this is really what these are market profiles, this is volume profile. Really, every single day, obviously reading it and making sense of it, look, it is hard work. And anyone who tells you this business isn't difficult is having you on. It's incredibly hard work. But if you're going to put in the time to develop so that eventually you can read it and it does become easier. Obviously, you need to be looking at the right things. And I've never met a trader, a successful trader, who's not looking at volume or looking at some sort of profile of how volume is developing throughout the day. And the reason I say that, and it's related to my previous point about how this sort of foundational theory of things being in a range or things breaking out are happening everywhere. Okay, they're happening everywhere. If you just think of simple markets like anything that you may buy at the supermarket, you know, I use milk a lot as an example, but let's be different. Let's use a different example. It could be something like a bar of chocolate. Now, typically, if you think about it, bar of chocolate might cost you, say, and I mean a medium-sized bar might cost you £1, right? Now, obviously, if you live in a different country, it might be $1. It could be something in your local currency, but it doesn't matter, right? The theory is, or the principle is exactly the same. If something's costing you £1, and if every time you went into your local supermarket and you did a survey, and anytime someone bought a bar of chocolate, you ask them how much did you pay, they tell you the price, and you started to record that. So we can either do it this way and start recording it, or we can do it this way and have the price axis, essentially price or price, and we can have the pound here. Either way, it doesn't matter. And every time someone says, oh, I paid £1, oh, I paid £1, I paid £1, you're going to make a record of that. So this is quantity here, right? So this will start building up. Would you agree? Lots of people are generally going to say, yeah, I paid £1, I paid £1. There's going to be a lot of agreement at that price. Then, you know, the supermarket might go on offer, but how often does that happen? And even then, it's only like maybe 90p. It's a slight discount. So you'll have a few people that have bought at that price. And then you might have a day where it's, you know, the chocolate bar is getting close to expiry. So they just put it on really cheap, 50p. And a few people might get lucky and be able to purchase it at that price. And then equally, the other extreme of £1, where you'll have people who, when the bar of chocolate is new, something new in the market, a new flavor, and maybe the price is higher because it's just come into the market, the testing prices, people will end up paying a higher price until so few people buy it that they're forced to push the price down back to £1. Right, so this is what volume is. It's just telling you what transactions are, and this is going on in all auctions around the world. If you think about it, you know, if you go on eBay and you want to buy a phone or something like an iPhone, people are paying £1,000 or whatever. You're not using, you know, things like Fibonacci to see where the phone price bounced. This is complete nonsense. You know this. You're scrolling through, you're having a look at what price have other people paid. And if you did a distribution, it would look something like this. Hardly anyone is going to get it at a cheap price, and not many people are going to pay an expensive price. It's typically going to congregate around one price in the middle somewhere, central price. And you know, there is like, you can get into the statistics of this. Like, there's theorems around central tendency, and central tendency does tend to exist in pretty much a lot of goods and services that you and I have interaction with every single day. And my point of going on about this is I want you to see that this, all it is when you flip it sideways, is this. It's just volume profile. So you can see here on this day, crude oil, typically all of these transactions, most people, would you agree, you can see it here, there were a lot of transactions that took place in this area here. So I kind of knew when we were popping down into this area that you know, potentially the market was fairly cheap. And also, if you look at the previous day, obviously a lot of these transactions hadn't happened at this time, but nevertheless, I also had yesterday's reference. So you can see here, typically the majority of transactions took place around $43. So you knew that there was almost the price would be have this magnetic effect towards where most people are transacting. And why is that? It's, again, if you think about it, the same as what I just explained about the bar of chocolate or the eBay price of a phone. If everyone knows that the price is around £1,000, it's going to gravitate towards that. If everyone knows the bar of chocolate is around £1, or the supermarket that's selling it knows that there's a lot of demand at around £1, they're going to try and keep the price around there, aren't they? So if ever the price does tend to slightly drift away from £1 and they see that demand goes down, what they're going to do, they're going to put the price back to £1. Financial markets are no different. If the price starts drifting down here, what's going to happen? Buyers are going to come in and say, hang on, it's cheap. We know this thing is selling in this area, in this area, in this area, and therefore it's cheap. We want to buy it. There's going to be a lot of demand in these areas. And typically here, I know I'm rushing through a lot of this, but that's obviously because I want to try and keep it short and just make it an introductory video. Market profile, all I'm doing is, this is 1 day, okay? This whole area here is just 1 day, okay? And actually it's this day here. It was during the week. So what I like to use market profile for is I like to see, you know, where's value really been for longer than 1 day? Where's it been the last few days, several days? People talk about higher time frames and all of that stuff, and look, I don't mean this with no disrespect, but I really don't think they understand what it means to be looking at higher time frames. Higher time frames is looking at where do investors see value on a longer term basis. Now look at crude oil over the last, what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. Where's it really gone? It hasn't really gone anywhere, has it? We've been in this rotational, balanced environment, which I talked about at the start. We're not breaking out, right? We're not in a breakout environment. So when I come into this day, I'm very much looking at, you know, if we're in this kind of range like this, I'm going to be looking at doing what? Fading it. Okay, I could be wrong, but where's the probability, right? I want to be doing what the rest of the market is trying to achieve. And clearly in this type of environment, and we'll go over imbalanced and different types of environments in the future, in this type of environment, we're clearly rotational. On a longer term perspective, we're clearly rotational. And therefore, if we start getting into sort of extremes, and if you look at relative to the previous day, we were getting close to the edges. And again, I'm throwing a lot at you right now, I appreciate that, but just kind of hang on in there and think about it. It's just this. If the bar of chocolate started to get to 50p, loads of people are going to rush in and say, hang on, it's too cheap. And they're going to drive the price up. Same thing here, right? I'm just looking at where's the extremes. And obviously you can get into much more detail, but I'm just trying to slowly introduce this. And then when I get into this area, I'm looking at the order flow, okay? So this is where, just thinking, let me get rid of some of this and just make it neat. The final thing I want to get into is the footprint. So yeah, that's better. Just make that a bit neater. In fact, let me just get rid of it completely. That area, if you look, this area, sorry about that. This area down here, 42.58, it's just this area here, 42.58. So you can see it there. Yeah? It's this area here where I was doing a lot of buying. And actually, this is where I'm just going to bring in the footprint. A lot of people are interested around what's going on. I mean, obviously, I've said it before, you can't really see what's going on just a normal sort of candles chart. What's going on inside here. This just kind of shows you a little bit deeper and more intricate detail what's going on. And here you can see a lot of people getting trapped, getting into that extreme. Okay, so let me just, sorry, I'm doing a lot of flicking and back and forward here, but as we got into this extreme area where I was looking to buy, look here what's happening, aggressive selling. So I know there's people getting trapped, I know there's a lot of sellers coming in, and actually a lot of this isn't going to make much sense to you right now, but if you can see here, heavy selling in terms of delta as we're coming in, and I know there's people getting trapped here, okay? Think about it, when you're hitting short and the market starts going against you, what do? I'm trying to think of a polite way of saying this, but let's be honest, can't think of a better word than you crap your pants basically, right? And you start hitting buy and you want to get out. So I know that's going to happen when these final guys here, and potentially some of these guys in this whole area here, which is, and if I show you the price, Okay, you can see it is around 42.60. As soon as we start moving up from there, those guys are gonna get out in their droves, and therefore, as soon as I see some buying coming in this area, look, 42.60, same area. Sorry, make my pen a bit thicker. In this area, 42.60. Just clear this up. 42.60 in this area. As soon as I see some buying coming in, I know it's going to be aggressive. Okay, so I did buy once here, I took some scales, and then I bought again here. Okay, and these, look guys, you know, this is a serious business. This is no messing around here. These are full, any of you know futures markets, these are full CME contracts, as you can see here. You know, these are full contracts basically I'm trading in. So, you know, I've got around 5 contracts here, which is around $50 a tick that I'm trading in, and then obviously I'm taking profits as we head back towards more of a balanced area, you know, and we got close to sort of this area, which as I described is around the 1 pound of the bar of chocolate area in crude oil. It's around 43, which is where people see fair value in a rotational environment. And look, the final word, the reason I mentioned about this, because a lot of people will see this, they'll be familiar with futures and they're thinking, wow, you know, he's doing a lot of contracts, he's taking on a lot of risk. The reason I want to mention this is actually, I suggest that people don't actually trade this market, that you do this analysis on futures, but then stick to your retail platform, okay? So you don't need to be doing 10, 20, 30, 40, $50 a tick. You're going to obviously lose your shirt. You can do the analysis here though, because you're not going to be able to see observable volume on your retail platform. Things like TradingView and MT4, they're great for execution if you're doing small amounts, don't get me wrong, but for analysis, in my opinion, they're not very helpful because you're not going to be able to see volume. So you do need to have sight of it. So look at things like exchange traded markets, which is what I'm doing. Do your analysis here, and simply when you're ready to buy, you can go back to your retail platform and do smaller sizes, and you can buy into the market. So the last thing I want to say is, I said it at the start, look, I've never met a professional, successful trader that doesn't look at volume, okay? I'm not saying, I obviously do focus heavily on order flow, volume profile, market profile. I look at the VWAP and so on and so forth. Those are pretty much the only things I'm looking at. I know guys who do like to combine it with other things. I'm not saying that's all you need to look at, but at minimum, you do need to be looking at order flow. Look, like I said, it's like going on eBay or being a supermarket and you know, you're trying to set your prices. If you're not looking at where people are buying and selling, how are you going to know where profit exists? It's ridiculous, right? So start looking at this stuff if you can. Look at it very basically. If you've got any questions, obviously just let me know. I hope that was quite useful for you and gave you a little bit more detail. In the future, I'm going to try and get into more detail and go over much more examples of these types. You know, I do get busy because I do obviously trade for a living, so it's difficult for me to produce as much content as I would like to do. And obviously I'm busy with students in the G7 program as well. But if you've got any questions, let me know. I hope that was useful. Watch out for the frequently asked questions videos that I'm putting around. Otherwise, have a great August. I'll try and put a video out over the next few weeks as and when I can. Thanks very much.